Hey everyone, welcome back to Corporate Decoder, the place where we unpack company secrets so you don't have to. Today we are diving into a report that smells like a big shake-up and maybe a whole lot of new technology. This is a current report from Powerfleet Incorporated filed on the 14th of November 2025. Essentially, it is the company saying, hey, something important happened and we need to tell you about it. And what seems to have happened is they've posted an investor presentation. Now, usually these presentations are all about painting a rosy picture, but we are going to see if the numbers behind the shine tell the same story. Before we dive in, if you love getting these straightforward insights directly from company filings and want us to keep them coming, hit that subscribe button. And if you want to chat with other finance enthusiasts and get more exclusive content, join our Discord community linked in the video description below. So right off the bat, we know the company involved is Powerfleet Incorporated. They are reporting some news, and this is in the form of an investor presentation that they put on their website. Now, they are quick to point out that the information on their website is not technically part of this official report, but they are using this presentation for their investor meetings. Think of it as them dropping hints about their strategy and future plans. Let's quickly look at what they trade. Their common stock is listed on the Nasdaq Global Market under the ticker symbol AT. This is important because it means they are a public company and subject to these regular filings. The fact that they are talking about an investor presentation suggests they might be trying to signal positive upcoming performance or outline new strategic directions to their shareholders and the investment community. The main point of this filing is under Regulation FD disclosure. This is basically a rule that says companies have to tell all investors the same information at the same time. So by posting this investor presentation, that's their way of making sure everyone gets the same message. They are using this presentation to talk to investors, analysts, and other interested parties. And the presentation itself is attached as Exhibit 99.1 for us to look at. Now here is where things always get interesting. They include a big disclaimer about forward-looking statements. This is a very standard part of these reports. They are saying, look, we are going to talk about our hopes and plans for the future, but these are just predictions. Things could change, and the actual results might be very different. They list a bunch of words like expect, estimate, project, anticipate, plan, may, will, could, should, believes. Predicts, potential continue as indicators of these forward-looking statements. This is a crucial reminder that while we can analyze their current picture, the future is always a bit fuzzy. They specifically mention their beliefs, plans, goals, objectives, expectations, assumptions, estimates, intentions, and future performance. They also highlight their expectations around the financial impacts of their business combination with Mixed Telematics and the acquisition of Fleet Complete. These are significant strategic moves, and how they impact the company's financials will be a key area to watch. The risks they outline are pretty broad. They talk about global economic conditions, political and trade risks like tariffs and conflicts in the Middle East. Supply chain disruptions are a big one, especially for key components. Then there are the risks of technological changes being more complex or less effective than planned. Cybersecurity is also a major concern, as is protecting their intellectual property. Competitive pressures are mentioned along with navigating international political and economic landscapes, and of course changes in laws, regulations, and accounting policies. They also point to their other filings with the Securities and Exchange Commission, or SEC, which details these risks further. The substance of their communication with investors, the investor presentation itself, is what we need to focus on to understand the story. While the filing text here is largely procedural and precautionary, the presentation is intended to convey the company's narrative and outlook. Unfortunately, the content of that presentation isn't directly included in this particular filing document, so we can't dissect its specific numbers or claims here. However, the fact that they are furnishing it as an exhibit means they are officially putting it on record. This section item 9.01 talks about the exhibits. We've already mentioned Exhibit 99.1, the investor presentation. It's Exhibit 104 that is the cover page interactive data file, which is pretty much the digital wrapper that makes the filing machine readable for computers. And finally, we get to the signature. This is where the company officially states by the hand of its Chief Financial Officer, David Wilson, that everything in this report is true to the best of their knowledge. He signed this on the 14th of November 2025. Now let's get into our analysis. This filing is a bit different because it doesn't contain a deep dive into their latest financials directly within the main text. Instead, it points to an investor presentation. Typically, these presentations are where companies highlight their financial performance. Without seeing the presentation itself, we can only infer what they might be emphasizing. However, we can look at the context provided. They mention the acquisition of Fleet Complete and a business combination with Mixed Telematics. These are major strategic moves. Acquisitions are usually done to either grow market share, acquire new technology, or achieve cost savings through synergy. So, the investor presentation likely focuses on how these moves are expected to drive future growth, improve profitability, and ultimately benefit shareholders. The cautionary note about forward-looking statements is particularly important here. Whenever a company makes big acquisitions or mergers with another business, there are always integration challenges and potential roadblocks. They might promise massive synergies and cost savings, but the reality of merging two different company cultures, its systems, and operational processes can be very complex and costly. The risks they listed, like integration challenges, global economic conditions, and cybersecurity, are directly relevant to the success of these recent strategic actions. If we were to speculate based on common investor presentation themes, after large deals like this, they would likely be highlighting projected revenue growth, potential cost synergies, and an expanded global footprint. They might show charts illustrating how the combined entity will be a market leader in various segments of the fleet management technology space, perhaps focusing on metrics like total fleet managed, recurring revenue growth, or new customer acquisition rates. We would typically be looking for numbers like growth in revenue, profitability margins, and cash flow in their financial statements found in a 10Q or 10K. For instance, if they reported a 20% increase in revenue, we'd want to understand if that is due to organic growth from existing customers or from the newly acquired businesses. A 20% increase that is mostly from acquisitions isn't as strong an indicator of internal health as 20% organic growth. Similarly, if their profit margins are shrinking despite revenue growth, it might signal that the costs of integrating the new businesses are higher than anticipated, or that they are having to discount heavily to win new customers. The strategy here seems to be about consolidating their position in the fleet management and telematics industry by acquiring Fleet Complete and combining with mixed telematics. Powerfleet is aiming to become a larger, more competitive player. The investor presentation would likely be designed to convince investors that this strategy will lead to better financial results in the long run. This often involves a story of increased market share, expanded product offerings, and improved operational efficiency. But what are the potential downsides? The biggest risk is always overpaying for acquisitions or failing to integrate them successfully. If the acquired companies don't perform as expected, or if the integration process is messy, it can drag down the parent company's financial performance for years. We also need to consider the competitive landscape. The fleet management technology market is quite crowded, with both established players and innovative startups. Powerfleet needs to show how its larger size and expanded capabilities will give it a sustainable competitive advantage. In conclusion, based on this filing, Powerfleet Incorporated is signaling a significant strategic push through acquisitions. The investor presentation, while not detailed here, is undoubtedly the key document outlining their vision and expected outcomes. The company is certainly aiming for growth, however, investors should be wary of the inherent risks in integrating complex businesses and the competitive pressures in their market. The true financial impact of these moves will only become clear in subsequent filings. Alright, that is our look at Powerfleet's latest update. What do you think about their acquisition strategy and what it might mean for the company? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and make sure you subscribe for more corporate deep dives. Also, don't forget to check out our Discord community in the description for more insights and discussions. Thanks for watching, and well, see you in the next video.